I'm Allison Kaplan. I'm the editor-in-chief of Twin Cities Business Magazine. On behalf of everyone at the magazine, thanks so much for joining us today over the lunch hour. Hopefully you have some snacks and a drink, and we're going to dive in. This is our latest webinar on a topic that has been in the headlines really almost on the daily, and that is PPP loans. It seems like there's an amendment, an extension, a revision, some sort of change almost every week. And so we decided to bring in some real experts to get you up to speed on the latest rules and advice. Feel free to throw your questions in the chat or the Q&A. I'll be monitoring that throughout the conversation, and we will get to as many of your questions as we possibly can. We had some that came in advance, and we'll do our best to get to those as well. Now I want to thank our panelists who are taking the time to discuss the latest in the Payroll Protection Program and the latest developments. We've got two of them here with us today. Let's bring them on the screen and introduce them now. Hi, Jeff. Hi, Brandon. So Brandon Koeser is a familiar face on these webinars. He's back with us again, and he is a senior analyst with RSM's Cutting Edge Industry Eminence Program, positioning him to understand, forecast, and communicate economic, business, and technology trends shaping industries RSM serves. Brandon advises clients on conditions influencing middle market leaders. His focus is on the financial services industry. He's real smart, and he actually explains things in a way that I can understand it. So thank you, Brandon. Also joining us today is Jeff Roseland. He is the director of SBA lending for Old National Bank. Residing in Old National's Minnesota Eagan Banking Center, Jeff leads the sales and loan processing team for the bank's entire 5-state footprint. Transactions his team works on services include startups, expansions, business acquisitions, partner buyouts, and owner-user purchase and construction commercial real estate. Jeff came to Old National with over 30 years of financial industry experience. Over his career, he served in a variety of teams, including equipment finance, SBA lending, communications finance, and asset-based lending. He's very qualified to answer your questions today. So thank you. To those who are still streaming in, welcome, and please feel free to post your comments and questions in the chat and Q&A, and we'll get to them as we go along. Well, thank you both for being here. How are you doing?
Hey, good. Thanks for having me.
Yes, thanks for having us. You bet. Doing great.
Well, let's start by reviewing where we're at now. There have been a lot of updates. There have been a lot of amendments. Do you feel like those have addressed the problems with the program? Are we in a good place? Like, give us just your review of where we're at now. Brandon, do you want to start?
Yeah, absolutely. A lot has changed since we last spoke on this, Allison, and frankly, a lot's changed since the program launched on April 3rd. We've seen numerous revisions and adjustments to the program, a lot of which were received via feedback early on. And I think it has made things better, going from 8 weeks to 24 weeks for your covered period, going from a possible 2 years to 5 years if you're not able to achieve full forgiveness. These are all good things, along with the change of 75% of the costs or proceeds of the loan being able to be moved down to 60% for payroll, with the remainder to cover your other allowable operating costs. All good changes. I would say there could be more done. I think if you were to ask every one of the participants listening in, they would probably say, we want more in terms of forgiveness. Possibly stay tuned. We may touch on that yet today, but good things have happened. We still have a ways to go, though, in the program, especially given that there are now 24 weeks for people to use their proceeds. But things are at least moving in the right direction.
Great. Jeff, what's your take on it?
Yeah, I'd agree with a lot of what Brandon just had to say. A lot of good positive changes based on feedback from bankers trying to make it easier for their borrowers, directly from borrowers. So, right now, the big key, I think, for a lot of people is really that forgiveness question and going through the forgiveness process for their loans. So, we're hopeful that they'll continue to make some changes that will be beneficial to people that have existing PPP loans. And we're also hopeful that they'll modify the program a little bit with the next round of stimulus to make the PPP funds available again, possibly a second time for certain borrowers, or they'll make other revisions again to somehow augment the program so more of the funds that have already been appropriated that haven't been used are able to get out into the economy.
Okay, thanks, Jeff. You've touched on a bunch of things that I want to drill down a bit further. Let's start with forgiveness. You had mentioned to me the other day that Old National is in the midst of standing up its forgiveness application process. Can you tell us a little bit about what that looks like?
Yeah, you bet. So how the SBA has organized it is that there's a paper application that's out there for forgiveness. So they call it, it's an application, and there's actually two different forms, an EZ form and just a regular form that a borrower will have to go through, and we'll get into maybe more of the details on which form works in which situations. But what we have done is we've partnered with an outside vendor that is going to take a borrower through an online process to actually fill out that application. So basically, they'll go through and they'll put in the information that will then populate the forgiveness application. They'll be able to upload the required documentation, and then we will basically take that information, put that in a format where they can sign it electronically, and then we'll take care of transmitting that in a fashion that the SBA wants. So hopefully trying to make it easier for the borrower to walk them through the process. The EZ application by itself is looking at it from a one-page form, it's fairly simple. So the online process that a borrower would go through is again fairly simple. It's a little bit more involved if it's not the EZ form, but again, that's where hopefully our portal will help the borrowers get through that process and understand the values that they need to put in. The nice thing too is it will automatically calculate things, so they don't necessarily have to worry about the math that might be involved if they did it themselves, kind of on via a paper application. So we look at it as it's a positive for everybody. It's going to reduce errors. Hopefully, it will speed up the process once everything is kind of operating at a normal pace, and just make it easier on the borrower to go through the entire process.
Great. Sounds good. Thanks, Jeff. Brandon, you mentioned to me when we spoke a week or so ago that a lot of the PPP money is sitting in accounts, that it actually hasn't been touched. Why is that?
Yeah, and it really, I think the theme for that comes down to one word: uncertainty. If you look at when the program was rolled out early on in this pandemic, uncertainty was really the buzzword that everyone was anchoring on in terms of what's going to happen. So as people applied, as businesses applied, they got their funding. Uncertainty never really subsided, but the uncertainty shifted in terms of how long does this pandemic last? How long can my business sustain operations if we are partially shut down, entirely shut down? What happens once I start reopening? Will my customers, my vendors, will everyone return to me in the same way, shape, or form? And as people kind of started to feel things out, the question started being changed from more uncertainty to, okay, well, if I did really need this or think I need this based off the way the program was written early on, but things have changed, I still think I need this. I still think I meet the requirements of the program, but now I'm not just certain if I might want to try to weather this out using either cash reserves, possibly maybe trying to find alternative sources of borrowing to alleviate the process that people might have to go through from a forgiveness standpoint. And there was even a public perception issue that some businesses had. The SBA just released some detail last week on borrowers that received these loans, $150,000 and up. And we saw early on when some large organizations, some national publicly traded companies received some funds through the program, received a lot of backlash. And there were businesses that saw that and they said, well, how is that different possibly from the way I might be perceived if I borrowed through this program? So the money is still sitting there. From talking to some bankers, and Jeff, you might have a good viewpoint on this. The funds are now kind of starting to leave the program now that we've seen this change from 8 weeks to 24 weeks. That's been a big benefit. So some businesses have felt comfortable. Now I can actually use the money in an appropriate time frame. But there's still questions out there. And I think one of the big ones is, what does forgiveness look like? What happens if I don't obtain forgiveness? What does this loan look like? I think we'll see that money start to move now here, early July into the third quarter. But really, that second quarter was just met with uncertainty. And what do I do with these proceeds? How do I take them and utilize them to the best way?
Right. Brandon brings up a lot of good points. Jeff, what's the banking perspective on that?
Yeah, I think, for every borrower, their situation is different. We certainly saw some borrowers that had an immediate need. When they got their loan, by the time they got their loan, their business had, if it was very much of a service or a retail type business, their revenues were gone. And the intent of the program was really, was the Paycheck Protection Program. So it was really meant to stand in place of laying off workers, furloughing workers, having them go on unemployment, and to keep the companies, employing the workers, even if they couldn't use them fully because their revenues had been impacted because of the pandemic. I think what we've seen is obviously that's dragged out. The pandemic has caused, a much longer time frame in terms of its impact on businesses, and it starts at retail and then it works all the way back kind of through that supply chain. And I think now it's starting to impact a lot of distribution type companies, manufacturing companies a little bit more so. Some of those companies unfortunately, they're seeing some of the COVID impact literally their workers, and they're not able to fully staff their plants and their businesses. So there's again, every business is impacted differently, and some needed the money right away. Some didn't need the money right away, but they took it because they saw what could potentially happen, right to what Brandon said about uncertainty. Some of those borrowers, because of some of the public comments from different officials, caused some of those borrowers to give the money back. Basically, they were like, we're worried what that's going to mean to us if we take it, if we didn't really technically need it right now. Some of those borrowers, I think, would like to have access to it because, again, it is, the pandemic has taken longer, and the impact has been drawn out much more than they thought so at first.
Right. I think from the comments and questions that are rolling in, we see that a lot of people have questions around those deadlines, and we're going to get to some of those specifically. But before we do that, let's talk a little bit about this latest round, which is round 3, right?
Mm-hmm.
There's still time to apply, and there's still plenty of money, right? Who needs the money now? Who should be applying now? Brandon, do you want to start?
There's roughly 130 billion, give or take, remaining, and I would say the SBA releases that information almost daily. And I would say any business, as you sit there meeting the general requirements, if you were harmed immediately, or you are now facing some challenges, given, as Jeff pointed out, how long this pandemic has dragged on and how it's impacting your business, you 100% should be looking at applying. This program is really designed to provide what I call some certainty in a very uncertain time. And as much as the uncertainty always seems to be far greater than certainty, it's there to give ease and some comfort. If you just think of industries at risk, obviously food and beverage, restaurants. I know, Allison, you have reported, your team has reported on restaurants, some of our favorites here in the Twin Cities, that have been harmed very negatively and shut down. That's an example. If you are specialty retail, travel, leisure, hospitality, and you haven't yet looked at this, I would highly encourage you to look at it, because it does provide some aid. And if done correctly, it's entirely forgiven. So there really is a maximum benefit to you to do so.
Right. Jeff, what are you seeing at the bank? Who is in need of money now, and who do you think should be looking at this that maybe isn't?
Yeah, I think it's, again, every situation's unique. Certain businesses thought that they could weather the initial storm. They had enough cash reserves or other resources that they could draw upon. again, as it's extended, they've realized, okay, I'm kind of at the end here. I need another lifeline, and that's where a PPP loan, if they knew of it, they previously didn't apply because they thought it wasn't for them. I think Brandon, brings up a great point. It very well could be for you, especially if you're in that service or that retail industry. But again, even, distribution type companies, wholesalers, manufacturing companies, I think it's pretty hard to say that, every business hasn't been impacted somehow, some way by what's going on with the pandemic. So just about every business, should be, small business anyways, as it's defined by the SBA, should be eligible for a PPP loan, and they should seriously consider it. Again, because of the uncertainty, I would encourage anybody to take a strong look at it.
Right. What about nonprofits? We actually have a question from one of our viewers asking if any of this applies to nonprofits.
Yes, it does. So if they're a 501(c), then they are eligible for a PPP loan.
Great. Okay. So Congress returns to DC later this month. There is a lot of talk about another stimulus bill, possibly by the end of July. Based on what you're seeing, based on all the numbers that are rolling in, what do the two of you think? You're in charge for a minute, okay? Everybody in DC is listening to the two of you. What else do you think businesses need right now beyond the payroll protection program? What kind of aid would you like to see available for businesses from your dealings here in Minnesota and beyond? Brandon, any thoughts? I know it's a big question.
The simple answer is more. Jeff touched on earlier, there's hopes out there right now with legislation that is currently on the table, proposed. I know the president will be releasing his plan on the coming weeks as well for the next phase. But I think the real thing that needs to happen is there needs to be more for small business. Getting the PPP extended a few more weeks through August 8th was a big one. But there's going to need to be more done for certain industries as you look around the country to see how, increasing case counts are beginning to impact businesses. You look at California, Texas, Arizona, Florida, businesses that had started to reopen are essentially being stopped and in some cases being scaled back from continuing to reopen. And that creates a whole set of problems that people may have thought about, business owners, stakeholders may have thought about early on, but really hope they wouldn't have to deal with. And the reality is if we see like similar occurrence here more than what we have right now, that's going to create issues. And, one thing that I know is in the House and Senate right now, there's a bill out there that will provide roughly $120 billion in relief for food and beverage related institutions or organizations. It would be very similar from what it sounds like to the PPP program in that it's a grant. But that would be very targeted to one sector that's hit. But if you look at some of the speak and talk that you're hearing, obviously they're trying to do more, both at the institution, the business level, but even at the consumer level, right? Because consumers need to be able to spend the money at those organizations as they're reopening. And given kind of where we're at with unemployment, there's still a lot of talk around how to make sure U.S. consumers that have been negatively impacted can continue to help support businesses as they begin to reopen.
Right. Can we just take 1 minute and say, Brandon, why didn't you tell me before now that in the industry you're calling it the PPP? I didn't know that lingo. I'm going to start using that now. The PPP. Jeff, what do you think? If you were advising Congress right now, what other kinds of aid beyond the PPP do you think we need for business?
Well, so yes, one of the things that I've heard that Congress is looking at, they're actually going to the P4. that's kind of what they're calling it, and that's where again it would be a second PPP loan that would be available to certain borrowers. So I'm all for that. I think that's a great idea because there's a lot of businesses, the one thing that there's been a lot of changes and there's been additional guidance that has caused, how people look at the program. A lot of that's happened, but one thing that hasn't changed since the very beginning is how the loan is calculated effectively. So you come up, you figure out what your average monthly payroll is, and you multiply that times 2.5, and that's what your loan is. So you get 2.5 months of payroll coverage to cover your payroll as well as the eligible non-payroll costs, which again, for some businesses, as we've been talking about, that's not enough. So I think, you don't necessarily need to change, the calculation, but I think, again, making another round of PPP funds available for a segment of borrowers that really need it. Food and beverage, Brandon talked about, but then also, anything that's retail, entertainment, service related. Certainly a lot of those businesses have not been able to return to where they were, pre-pandemic. And so I think those businesses that certainly can demonstrate that they have not come back to where they were should have an opportunity to apply for some additional funding, for their business. And then, oh, go ahead. Sorry.
I'm sorry. And just to be clear, I mean, that would require additional legislation. That's a question that we're getting a lot. And Mary Lou, thanks for posting it. Mary Lou points out that her company received a loan when the PPP was first offered. That was, months ago. Now she wants to know, could we get another loan? Could we apply again? Could you apply again today? And is that something that needs to change? Jeff, do you want to take that?
Sure. Yeah, no, under the current legislation, as it's written, you can only get one PPP loan. So one per borrower, and that's that. So it would need to be a legislative change Congress would need to agree to it. I'm sure there's a lot of support for it on both sides. I know that, the president has in Treasury, they've signaled that I think, they want to do more stimulus. So I think there's going to be a lot of support for it. What it ultimately is going to look like, the devil's always in the details. But I think there is a lot of support, but it does need to be, changed by Congress so that the lenders would be able to do a second PPP loan.
Brandon, anything to add to that from the accounting perspective, from RSM? Should there be another round for businesses?
Yeah, I definitely think there should be. And Jeff kind of hit it on the head. There's a lot of people that got the money that used it and continue to need it. And Mary Lou's question is spot on with a lot of questions that we're receiving from clients, but other stakeholders that we interact with. More is simply needed. And my hope is that we see that sooner rather than later. Obviously, Congress is Congress and Washington is Washington, but my hope is that we're talking in another week or two about further aid. And one thing I just want to mention, and I'm not, trying to open a can of worms when we talk forgiveness, because you can talk all day about forgiveness, but there is something that is currently being proposed in the Senate, and that would be more or less this presumed forgiveness if you received a loan at $150,000 or less. Now, if you're a banker, that means hopefully some more ease in processing the applications as they come in. But if you're a business owner that has received the funds, that's a big stress relief in terms of some of the forgiveness process that you'd have to go through. So there's a lot to be paying attention to in Washington. And I think whether you're, talking with your accountants, your advisors, your lender, they're going to be up to speed on this. So just make sure that you're continuing to interact with them, because obviously we've seen changes happen regularly, sometimes at odd hours of the evening. But it's important just to make sure that you're in those communications with the people you trust, because it could mean strong or really good benefit for your organization.
Okay. On the subject of forgiveness, many questions coming in. Jeff wants to know if a company has met all the requirements for full forgiveness of the PPP loan, is there any reason to delay applying for forgiveness? Jeff?
Yeah, so what happened with the legislation, they called it the Paycheck Protection Program Flexibility Act. So that was what was enacted, I believe that was early June. And I just, what was the question again? I'm sorry, I got distracted there for a minute.
No, that's fine. The question is, if you've met all the requirements,
yeah,
for forgiveness, is there any reason to delay applying for forgiveness?
Correct. So the quick answer before I forget it again, no, or get distracted again. No, there is no reason to necessarily delay. There could be good reasons to delay, but once you've exhausted your PPP loan funds, you can apply for forgiveness prior to the end of that, what they call the covered period, or that's the, again, the forgiveness period, that 24 weeks. So there is the ability for a borrower to do that, and they can start the process at that point in time.
Okay. Okay, another question along the lines of forgiveness. Ramon wants to know, can a borrower apply for forgiveness before the end of the 24-week covered period? Sort of similar question. Yes, I'm guessing?
Yes.
Brandon? Yes?
The short answer is yes, they can. The one caveat I would say with that, and Jeff, I know you can certainly chime in here if I don't get this quite right, but if you were to apply early, say you were under the 24-week rule, you would still have to factor all of your costs over that 24-week period. You wouldn't just be able to say, well, I met all of what I needed to within 18 weeks and use those computations. You would still have to use the full 24 weeks. Correct, Jeff?
That's to be determined to a certain extent. We don't have great guidance on that. That you can go both ways. That there's probably depending on the business, maybe even the advisor. There's disagreement. I can tell you within the banking profession, there's a bit of, okay, what exactly does that mean? Because when you've exhausted your loan funds and you've done it over a shorter period of time, there's really no longer period that you can look to. Where I know that it does impact you is if you have had a reduction in your salary and wages, you do have to, if it was more than that 25%, and again, we don't need to get too far in the weeds, but basically if your salary employees or your hourly employees had their wages reduced more than 25%, you have to look at that amount over 25% over the entire 24-week period, and then that would be a reduction to your forgiveness. But I'm not quite sure, to be honest with you. I'm just being very honest with everybody, exactly how you would go about calculating. And I think it's just with actually what you've spent your money on during that the period where you've come up to where you've actually applied, if it's less than that 24-week period. So it does get a little complicated. That's where you got to reach out to your advisors, your banker, and really take a good hard look at the application and the instructions that go along with the forgiveness application. And that might, in your situation, that might help with the answer.
I have to think for the two of you, just a small aside, I mean, I can't even imagine how you're keeping up. And I mean, are you just reading like reams and reams of papers and legislation every night just to keep on top of it? I mean, how do industry professionals like yourselves, how do you make sense of everything happening, especially at the speed that it's changing?
Yeah, Brand, I'm sure, yeah, it is a lot of reading. Luckily, they haven't come out with, well, I guess luckily, but they haven't come out with anything recently. So there hasn't been a lot of reading. It's just been trying to interpret what's already out there. So you talk to other colleagues, you talk to other professionals that are involved, and try to get your best guess. You reach out to the people at the SBA for additional guidance and in particular situations, and hope that they're taking that and hearing it from other people, and then that leads to further guidance to help other lenders as well as then their borrowers. So it is a lot of reading. That's for sure, and it's reading legislation, which, if you're a lawyer, maybe it's a little easier to read, but if you're a banker or a borrower, maybe an accountant, it's a little more difficult. You got to read it a few times to see how they're really addressing, kind of what they're trying to tell you. Brandon, what about you? Probably not the summer reading you had planned on?
Yeah, it's not necessarily the most enjoyable at times, but it is necessary. And of course, as Jeff, you're well aware, when some of these updates come out, it happens at night. And there's been plenty of times where I've received a text message from a few people to say, hey, I don't know if you saw the email, but there's an update out there that you should go read so we can talk about it first thing in the morning. And that happens to be your bedtime reading. And sometimes it's a little tougher to stay awake than others, as Jeff pointed out.
Wow. Well, we're lucky that the two of you are keeping on top of it. Here's a question from Lisa, and thank you all. Feel free to continue posting in the chat or the Q&A, and we'll try to get to all of them. So Lisa says that her company got a PPP loan in May. She says, we can't use our proceeds up in 8 weeks. but we will in 10 weeks. Her company has decided to merge with another company in August. So just to make things more interesting, they'll be on a new payroll starting in August. So her question is, do you have to stick with that 8-week forgiveness requirement, or can you pivot to the 24 weeks since the rules have changed since she got that loan?
Yeah, I'll take the first answer here. So the way that the legislation is crafted now, every loan is 24 weeks. So the forgiveness for every borrower from day one to today is a 24-week forgiveness period. For those borrowers that received their PPP approval through the SBA prior to June 5th, they can opt in to an 8-week forgiveness period. So so in this case, I think in Lisa's case, they got their loan in May. They would be able to use that 8-week period if they want it. But they also obviously they automatically have the 24-week period, and if they've used the proceeds up before that, they can apply for forgiveness prior to that. I would encourage them to get that taken care of prior to the merger. You're going to have to work something out in the merger documentation as it relates to kind of that PPP loan, because it's very unlikely that the funds will actually have been received by Lisa's company prior to that merger occurring. So there's going to need to be some protection for Lisa as well as for the buyer on what's going to happen with that PPP loan and how forgiveness is going to get figured out and who's going to be potentially on the hook if that forgiveness doesn't come through for either what they've applied or it's not fully forgiven.
Okay. Brandon, anything to add to that?
That was well said. Well said.
How about this? What about a new business? And props to anyone starting a new business right now. But if you are just forming a business this year, are you immediately eligible for a PPP loan?
I would say it depends. Depends on if you looked at the rule, you had to be a business in existence before a certain date, and that date escapes me. So if you just started it this summer, I think as things currently sit now, you would not necessarily be eligible. But if you were a business that was in operation earlier or potentially late last fall, not quite a full calendar year, you would be eligible for the program.
Correct. Yeah, I think it was sometime in October. So I think that's what it was. You basically in the fourth quarter, October timeframe, if you had started your business prior to that, then basically as a lender, or how we would calculate it is we'd look at your payroll for that the first 2 months of 2020, and then divide that by 2, multiply it times 2.5, and that would be then your PPP loan amount. But if you started your business after that, then that wouldn't be part of the PPP loan eligibility at this point in time. That could change. Obviously, as this is extended on, they might make some allowances for businesses that have started up later.
Okay. Marie asks, and these are great questions. Thanks everybody for posting them, and thanks to the two of you for being willing to answer on the fly. Marie wants to know, after the loan forgiveness, if money is remaining and it rolls into the loan, are the use of funds still monitored, required to be as originally designed, or can the borrower use think without regard to proportions? Does that make sense?
Yeah,
Jeff?
I think if they've gone through, their forgiveness period and they've applied for forgiveness and there's money left over, there's a loan then on the books at that time. I believe, and I say that because there's no firm guidance on that, that answer. So I would say, yeah, that at that point it converts to a loan. They did sign up that they had to use the proceeds of the loan for eligible purposes. So even though it might not be fully forgiven for whatever reason, it still does need to be used for those eligible purposes, which would be, the payroll related costs, and then the non-payroll costs, which would be, interest, utilities, and rent type expense. So I'm pretty sure they would still need to use it for those eligible what the program was designed for. But obviously then, they have a loan that would be repaid over a time frame 2 to 5, even out to 10 years.
Okay, great. Brandon, anything to add to that?
I would just say that's a common question that's being asked right now, is if I'm not able to use this. As Jeff pointed out, the program does say you have to use it for these purposes. And if you do in good faith try to use it all for those purposes and are unable to, and you have money left, obviously it goes into a loan, and the rules would probably change and allow you more flexibility at that point.
Okay. A lot of questions about numbers of employees, and it seems like this has been, so tricky, especially for businesses that have had to close or were closed. So John asks that, he says the easy form asks for the number of employees at the time of the loan application. All of his employees were furloughed at that time. So does that mean that his employee base was 0? Or does he still count those furloughed employees when applying for the loan? Jeff, any thoughts on that?
Yeah, I think if they're furloughed, they're still receiving benefits. So that's different than a layoff, and that's just a technical, just in kind of this situation. But so I think they would still be considered employees. But if they're not on the payroll, if it's more of a layoff, and it would be potentially 0 or 1 if you're the owner. You might be, or one of the owners. Then those would be, say, the residual employees at that time.
Okay.
Brandon, if you've got any thoughts on that, that's an interesting twist that we haven't seen that one yet.
It is, and I think you'd get at the point that they still are technically being compensated. There might be a wrinkle I'd have to think through here about total compensation versus just the benefits component of it, but they still technically would be on payroll if they were furloughed because they are receiving benefits.
Okay. All right, here's one that's going to require your full concentration to work through. Hunter is challenging our experts today from RSM and Old National. He says his company has more than 500 employees, qualified by virtue of meeting the alternative standard of average revenue for the industry. This makes sense. So he has actually 1,200 very part-time employees who work, 10 hours a week. And I'm sure there are a lot of people listening who have part-time employees. So now he's trying to figure out, how do you go about documenting all of that for the purposes of forgiveness? When the loan was funded, they had 30 to 40% of their part-time employees. They've modified their status. Some wanted time off, others wanted extended time off. And I think, a lot of companies are grappling with this as everybody has different comfort levels. So I guess the big question is, how do you deal with part-time employees when it comes to, documenting everything for forgiveness? Jeff, do you want to start?
Yeah, sure. So with the application, they asked for number of employees. So there really wasn't a determination if it was a part-time or a full-time employee. It was just number of employees. So if you had 10 employees, 5 of them were part-time and 5 were full-time, you had 10 employees. And that was from an application standpoint. When you start to get into the forgiveness calculation and filling out the tables and such, and calculating your number of employees, it's done on an FTE basis, or an average. You get into an average FTE basis. And so there's a couple ways you can go. You can look at, anybody that's part-time is 0.5 and anybody that's full-time is 1. That's kind of the calculation. Or you can go into tenths, and depending on how many hours, say, they would work in a given week or a given pay period. So you would go through that, and unfortunately in their case, you're going to have to do it for potentially 1,200 employees to calculate what their average FTE count would be, and compare that to a kind of a pre-pandemic period to see if there's been a reduction in the number of FTEs for their business. So it will be a very time-consuming and but maybe complicated type process, but that's, then they should be working with their accountant to help them go through that process. or certainly the payroll provider, because there should be reports that their payroll provider can provide to them. Obviously, the big ones that are out there, they're well aware of what's going on with PPP and their ability to provide reports to help with the process. They should definitely be utilizing that source.
Okay. So what if a company has received a loan, has used up the triple P money, and now is in the position of needing to do some layoffs? Does that mess with your ability to get forgiveness from the loan? Brandon, what's your understanding of that?
Yeah, Jeff, correct me if I'm wrong here, but I believe, given the intent of the loan in and of itself, right, to help maximize or maintain employment, the goal is if you receive those proceeds, you would hopefully be able to avoid layoffs or downsizings. Now, given what we're seeing with pandemic flaring back up in parts of the country, that may not be possible. And I think further clarification most likely will be coming out on that, just based off of the flare-ups, and if you call it the resurgence of first wave or second wave increasing. It may be inevitable, but I believe, the intent would still say you need to make sure you try to maintain that. But, Jeff, I don't know if you've seen something that would indicate, you're actually 100% prohibited, and that would preclude you from receiving the 100% forgiveness.
Yeah, that kind of goes back to that question, earlier question, if you were able, can I apply early for forgiveness? And you certainly can. What we're a little unclear on is exactly that point. What's the residual impact to companies if they do decide? So they apply early, they calculate out that their loan is fully forgiven, but then they take action and they're still within that 24-week covered period. What's the impact to them? Honestly, we don't know with certainty exactly what that means and what the impact potentially could be for that borrower, because even though they've applied early, the way the forgiveness application reads and the way the instructions read, the covered period does not shorten to the time that they applied for forgiveness. The covered period is the covered period. It starts 24 weeks after the date that your loan was dispersed. And that's, it's one number and only one number. So if you apply early, you've used your funds, there could be a residual impact if you take those kind of actions outside of that. And I think, again, that needs to be addressed. There needs to be guidance provided to the lenders, certainly to the borrowers, because that's a bit of uncertainty, which we went back to very early on, is never a good thing with the program. And that's the one big one I see out there right now.
I mean, it's hard to remember that. I mean, when this first came out, we thought maybe this was going to resolve itself in a matter of 8 weeks, and it was just going to get some of these businesses through. And this is just continues to snowball. I guess the legislatures are really just kind of designing this in real time, which is never easy.
No. Well, and I would add to that, if I could, there are, if you look at the forgiveness application and the instructions, there are a number of what they call safe harbors, that if you go through and, just using that example where they fully utilize their PPP funds within that like a 12-week period, and they wanted to apply for forgiveness early at that point because there were some actions that they might want to take after that. There's really there's no incentive necessarily or disincentive for them to wait until the end of the 24 weeks, because again, there are a number of safe harbors, even though they might take action with their employees to reduce headcount, to reduce salaries, that might otherwise reduce their forgiveness. There is the ability for that to be waived, that reduction to be waived, if at some point they hire back those employees before the end of the year. If they are unable to hire back those employees because they don't want to come back to work and they can document that, or they can't hire replacement workers of a similar skill level. So that could be another way that their forgiveness is reduced. And then the third one, which is I think going to impact a lot of these borrowers or will be to their benefit, is if they can document that their business has been, negatively impacted on a pre kind of, pandemic period compared to what the covered period performance was. So if your revenues were down 50%, based on kind of what the state was saying that you had to be shut down or other rules that were impacting your business. That would be another way that you could get what otherwise would be a reduction in your forgiveness waived, and then you'd be back to where you could get your loan fully forgiven. So that's why I say you really got to look at the instructions and the application to go through that and determine what's the best course of action. And it doesn't hurt you to wait. Your loan, your repayment to your loan is not going to start until after your forgiveness has been paid by the SBA, or a decision has been made by the SBA. So you don't have to worry about paying it. And whatever loan amount is forgiven, the interest is also paid by the SBA all the way back to the date of disbursement. So, a rush to do it, sure. I think everybody just inherently would like to get loans paid off and debt paid off and make sure that the money's there to kind of take care of it. And we absolutely, want to help as many people, but you got to make sure that you're looking at the calculations and that you're not putting yourself in a position where you might not get your loan fully forgiven, and there might not be a do-over at that point.
One thing to add on to that, Allison, that Jeff, I think you just said it, and don't necessarily need to be in a rush. When the programs were launched, it was a rush because the money wasn't infinite, right? It was finite, and we saw it in round one used right away. In this case, it's counterintuitive to how a lot of business owners have been thinking. Like, I need to get the forgiveness taken care of right now to make sure that I know I don't have this loan, it's fully forgiven, and I can move on and continue to focus on my operation, how to get back to a new or a next normal. But as I think we've seen, the program as it's evolved has done so in a way to try to accommodate things that have come up. And I think the changes that we'll see going forward, whether it's through changes to the existing program or even possibly new legislation, I think are going to be to the benefit of the business owners that are being impacted. When the bill was written and the program was launched, we existed in an entirely different environment than we do today. And we will in a month from now. So I can understand, and I've heard a lot of business owners say, I want to get my forgiveness and I want to get it in. But I would just say, time right now isn't necessarily a bad thing. So just maybe take a deep breath. Look at those applications, talk to your lender, start figuring out what the forgiveness process, the application will look like. But being in a rush, it could not be of the most benefit that some may think right this moment.
That's great advice and great perspective. And I sense that from all the questions that are pouring in, that there's just a lot of concern around forgiveness. And another thing that pops up in a lot of the questions we're getting here, and thank you all again, really great questions, is the changing employee status from the time that that the business applied to the loan until now. An employee has left, or their pay has been reduced, or their hours have been reduced, and I sense a lot of concern from businesses that that's going to impact their ability to get forgiveness. Is that true, Jeff?
Yeah, it potentially could be, but that's well, it certainly could be. And there is a calculation that if your FTE count has been reduced, or you've otherwise reduced your salary or your hourly wage below 25% what they were kind of pre-pandemic, that will directly impact the amount of forgiveness that you get. There's a math equation that goes with that. But again, as I talked about before, there are various safe harbors that are out there that the businesses can utilize to waive any of that reduction that would otherwise be calculated. And so that's why, as we talked about time, that is on your side to potentially get that forgiveness waived. If you can, at some point by the end of the year, you can return those workers back to their original pay, or bring them back on. And because, we're in an environment where it's full steam ahead, that will benefit the borrowers.
So is that the advice that both of you would give? I mean, your goal should be to reinstate those employees, to make up those, reduced wages. Is that the best strategy for businesses that are just kind of struggling to stay afloat right now? Brandon, you want to jump in?
Go ahead, Brandon, you start.
I was going to say, It's probably going to be different for everyone, depending on if you had to reduce headcount, depending on how much headcount you had to reduce by, depending on how quickly you were able to open up your operations to bring people back. I've heard a lot of people who have been at times unable to bring people back for a variety of reasons, and that's created some stress and headache and heartache. To receive forgiveness, depending on what you had to do early on, obviously bringing back employees and restoring payroll is probably step one. But as I've talked to more individuals, and I'm not necessarily advocating for this, but I'm reminding people that if you do get a majority of this loan forgiven and you've done what you need to do through the program, what may be left as a possibly 1% loan for 2 or 5 years or possibly even longer may not be the worst possible outcome, frankly, because it could give you a little bit of cushion to spend in other areas. For example, if you're a restaurant or owner and you're trying to get people back into your restaurant, but you have all these costs now for the PPE that your servers, that your cooks, that your frontline staff have to wear, that's an added cost you didn't have 8 months ago. And how do you plan for that when you don't have 100% return to your revenue stream? So long-winded answer there, but obviously restoring payroll salary is something that I think the program is really intended to do, but it comes down to your unique situation and how you can best manage your business and still utilize the program to its fullest.
Sure. Couple quick admin questions as we're approaching an hour already. We could, keep going. Lisa wants to know, can you apply for forgiveness directly to the SBA, or do you have to go back to the bank where you received your loan? Jeff?
Yeah, you need to go to the bank. So the banks have basically been deputized to implement the program, so it would need to flow back through the bank. Unfortunately, Lisa wouldn't know where to send it to the SBA, and they would just return it to her. So it would need to go to through her lender.
You need your banker. Okay, and then another one, Jane wants to know, do the PPP funds received, are they counted as part of your income for this year? Will expenses be deductible? Brandon, you want to take that one?
That's a very frequently asked question right now, especially given 7/15, the adjusted tax deadline is right around the corner for 2019. The short answer is the IRS has issued some guidance that really precludes the double dipping, as the accountants would call it. So if you did have costs that were covered through the program, those wouldn't be deductible. Currently, I've heard that there is talk to try to change that to try to help maximize more of the benefit for people that did receive loans and use those loans accordingly. But as it sits now, unfortunately, anything you paid for through the program would not be allowed as a deduction.
Okay, that's great information. Good to know. We had somebody asking about EIDL. About the relationship between that and PPP, and can you use both? I'm not going to pretend to even know the beginning of it. That's why you two are here. You're both nodding your head. Jeff, do you want to start?
Yeah, sure. So yes, the quick answer is you can have both loans or utilize both funding programs. The EIDL is there's kind of two components to it. There's what they call an advance, and that's, as I understand it, it's a little fuzzy on exactly, because there hasn't been like real firm guidance. This is a loan program that's directly with the SBA. So you would go onto the SBA website and you would have the opportunity to apply for an EIDL. That's what we're calling it, an EIDL funds. And you would be able to get an advance, which is a grant. It's considered a grant. It does not need to be repaid, up to $10,000. That's what it's historically been. And that's based on the number of employees. So if it's just you as a sole proprietor, you would be able to get a $1,000 grant through the EIDL program. If you had 10 employees, it would max out at 10,000. That's a grant that doesn't need to be repaid. Then there's also the EIDL loan, which is a similar program to PPP, but it has different terms. It has a different repayment time frame. It has more uses for those funds. They can be used similar to what a PPP loan would be used for, but two important things. While you have your PPP loan and you're in that kind of that covered or that forgiveness period, you want to make sure that you're not commingling funds, and you definitely do not want to use any idle funds for what you would otherwise be using your PPP loan funds. So certainly payroll is the big one. Make sure you're using your idle funds for other things besides what the PPP eligible expenses would be. The other interesting twist to it is the advance. That, kind of to go use a term that Brandon said, double dipping. With the advance, you've actually got to reduce your otherwise calculated forgiveness on your PPP loan by any advance funds that you took from the EIDL program. So in that case, if you had a $10,000 PPP loan and you had a $1,000 EIDL advance that doesn't need to be repaid, you'd go through, you'd calculate your forgiveness, and your forgiveness for your PPP loan would be reduced by $1,000. So the most that you could get forgiven is $9,000 of your $10,000 PPP loan. So you would have a residual balance there. Again, the government's like, hey, we'll give you $10,000, but we're not going to give you $11,000 based on kind of that calculation for what the payroll protection would be, because they kind of work hand in hand that way. So those are two kind of things. If I've missed something else, Brandon, you can pick it up from there.
You get the thumbs up for?
I think you got it, yeah.
Okay. Yeah. Okay, well, we're approaching 1 o'clock. I want to be respectful of everyone's time. Such great questions. Hopefully we've touched on a lot of the big issues, but before we go, Brandon, any final thoughts or just advice that you would offer to business owners and CEOs right now?
I think the one thing I just go back to telling a lot of people is, take a breath. Remember that, there's a lot of people in the exact same situation, a lot of businesses that are in a very stressful time still. But take that deep breath, reach out to your advisors, your lender, your attorneys, those people that have helped you so far in this process, because everyone wants to see you get through it. So don't assume that this is a battle you need to fight alone. Just take that breath and bring those close to you, around you, and we'll all work and we'll get through this.
Great advice. Jeff, what about you?
Yeah, I'll, kind of more from a bookkeeping standpoint, I would say keep good records. That's going to be one thing that will serve any borrower that takes a PPP loan. Make sure you're keeping very good records so that you can, effectively kind of connect the dots from that PPP loan that you got all the way through where you actually spent that money. It's going to be very important to do that. And I think to, kind of echo some of what Brandon said, as much as you can, try to stay positive. I think the good news is here, obviously the United States, very resilient people, economy, the whole bit. And, we'll get through this. Eventually we're going to get on the other side of this. We had a great, economy that was at, operating at record levels before this happened. And this is an event that it was a shock to the system for sure, but it wasn't because of something going on economically. It seems like, once we kind of get on the other side of this with a lot of things that, the medical professions are trying to do to help, the economy is going to come back. It's going to be different. There's no question. I think a lot of businesses have learned how to operate differently than they did before. Sometimes maybe in a more efficient manner, sometimes in just a different manner with working remote and such, but it's going to look a little different on the other side. So just, be prepared for that. But again, I think, try to stay positive as much as you can through this. And like Brandon said, there's a lot of people, we're all going through it together and we're all trying to help each other kind of get on the other side of this.
Right. Well, we recorded this, so now when I'm feeling down, I can just go back and play the two of you on loop telling me to stay positive and take a breath. So I appreciate that. I think we all do. We appreciate your advice so much and your time. I know it's been a relentless several months for both of you, Jeff and Old National, Brandon, RSM. Thank you so much for all the great advice today. Thanks to everyone for joining us and for the really fantastic questions. We will post this this online soon at tcbmag.com if you want to go back and take notes on any of the good advice, or share it with friends and colleagues as well. And there you'll find all of our webinars. We've had a lot of great discussions recently. Another one coming up tomorrow, growth strategies. So join us for that. Check it out at TCB Mag. And of course, I'm lucky that I know how to reach these guys, and hopefully they'll still take my calls. So when a new rule changes, we'll be on top of it and covering it at Twin Cities Business. Thanks to both of you.
Thank you all.
And everybody,
Thanks, everybody.
have a great day.